Hey everyone, welcome back. Today we're going to quickly look at Disney. It's probably been a little over a year since I last looked at their financials, and I'm actually very pleasantly surprised with what I am seeing. If you haven't been following Disney, their stock's been a bit of a wild ride. At the start of the pandemic, it lost about 33% of its value with all the lockdowns. Then the market realized streaming would actually benefit during this time, and the launch of Disney Plus was timed very well, and the market liked this news, and the price soared above pre-pandemic levels. And now, during the recent sell-off, the stock is basically back down to their lowest point in the last 5 years, which they reached during kind of that first COVID drop. So quickly, let me hit on their recent earnings, then we'll jump over into the DCF. They just announced their Q2 earnings, and it's looking pretty strong. 6 months through the year, they're seeing about 32% revenue growth, which is being primarily driven by parks and experiences, which is to be expected. They're already at about $14 billion in revenue for this business segment, and compared that to $16 billion last year. So the park is back up and running, and they're primed for a huge year when compared to 2020 and 2021 when parks were mostly closed. They've also announced subscription numbers, and they're looking very strong. They have just over 200 million subscribers across all their platforms, which makes them roughly as large of a streaming platform as Netflix. All of their businesses are churning full stream ahead, and all the numbers are trending the right way. The only thing that isn't is their stock price. Now let's jump into the DCF and see if we think there might be some value that's being left behind for us to pick up. First thing to note, if you watched my last Disney video, I projected out revenue by business segments. I was planning to do the same thing, but sometime in the last year, Disney actually stopped reporting at this level of detail, which kind of ruined my model as they only provide revenue by 2 segments, which is a pretty consolidated and high level, making it hard for my prior model to still work. So for today, I'm making my assumptions at a pretty high level, and I'm estimating total revenue growth. So for 2022, I have 30% revenue growth. This is based off a strong start to the year where they're seeing about 30% revenue growth. I expect the momentum to continue because it's primarily being driven by parks, which is up 100% year over year because it had a horrible year the last couple of years. And after this, I actually expect revenue to drop off pretty significantly down to 10% and then slowly decrease until we're in kind of mid-high single-digit level. I expect Disney Plus to grow slowly and parks revenue to continue growing slowly as well after this year kind of normalizes them out. This takes revenue from about $70 billion in 2021 to $160 billion in 2030. From a valuation standpoint, I get a $300 to $320 billion valuation. Compare that to the current market cap of $191 billion, I'd say the stock is definitely undervalued. I'm actually probably going to end up taking a position in Disney sometime in the next month or so. I've held Disney before and sold at different times, but I think this is a very attractive price to enter, and who knows, it might even drop a little bit lower in the coming months. So I may actually end up averaging down as I build my position. And the last time I actually built a Disney position was actually back at the start of COVID when it dropped below 100 a share. And when they dropped below 100 a share and they recently launched Disney Plus. I ended up selling a while ago so I could actually go all in on Alibaba, which I still love, but will probably put some of that money into some other stocks now that the market has sold off so much and things are looking so attractive. And you know, I love Disney as a company. Their IP is strong and unlike anything else. They're bigger than the other streaming companies, Marvel, Star Wars, Pixar, Disney. They're household names, and they're not going anywhere anytime soon. These franchises are probably some of the most loved in the world, and they control them. That's a pretty big moat. I definitely give Disney a buy rating, and I think over the next 5 to 10 years, Disney will dominate the streaming market. And also probably take over sports in a meaningful way. ESPN Plus and live streaming there has actually been huge for me to watch sporting events as well. But anyways, as always, thanks for watching. Please like and subscribe, and I hope you found this useful. Thanks so much.